You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
So these are very tough markets right now, at least for me, and I've been doing this a long time, so I'm going to say it's probably tough for most people. Biggest risk for Q4 would be getting too heavily short this market right now and a central bank turnaround occurring. You got to be aware of that.
I'm Bill Powers. It's Mining Stock Education, checking in with master trader Nick Santiago of MiningStockEducation.com. Nick, welcome back onto the show. Well, uranium has been on a tear. It's been up about $15 per pound, to about $70 per pound in the last 60 days. The ETF that you track sometimes, URNM, is up 50% in the last 90 days. Did you get a piece of this upward swing?
No, I didn't. I didn't get a piece of it, but it's been a great move. I will say it's been off to the races, but it is now parabolic. And I've told my members, a lot of them like to play the uranium stocks like Cameco, CCJ, the URA, which is another type of vehicle to use for it. But it is parabolic now. So if you own it, you trail the stop loss immediately. If you don't own it, you avoid it here. I would not be a buyer of it at this point. But as you said, it had just a tremendous run, and it was off to the races, and it's still fairly strong even right now. But I would avoid that play at this stage of the game. But unfortunately, I did not jump on that bandwagon. That was a great run, though. Great run.
Yeah, because you would usually play that with options, right, on the ETF?
Yeah, I would play that with options. That's the way I like to do it a lot of times, especially with those type of vehicles. That one broke out. I forget exactly where the breakout point was, but it was a sensational run and still holding up fairly well. But at this point, that run is over. We're coming, if there's a little bit more juice left in it, it's getting squeezed here. But if you own it, I would just trail that stop loss or take profits, but I would not be a buyer up here at this level now. It's parabolic.
Copper is $3.65 a pound. Where do you see the copper trade going?
My level I've given out to my members, ultimately, we're gonna be buyers around 312. So we get 312, 311. I think that's buy it and hold it. Don't even sell it. Just get on there. That's going to be a major bottom, and that's a bottom that could last for potentially 2-3 years.
And so even though you're a swing trader, you're willing to hold something that long?
Oh, sure. So how I like to do it, Bill, is I set 2 targets, target 1, target 2. Once target 1's achieved, I move my stop loss to break even, and I let the second half just run. And what I like to do otherwise, I'll go ahead and I'll buy call options on different copper vehicles or different stocks in the sector or industry group. And that's what I like to do. And then I calculate how far the run can ultimately go. I've done the copper trade not that long ago, a couple of years ago at the bottom in 2020. And myself and all of my members did really, really well. And we'll look to repeat that again, but the level's going to be down when copper gets around 312, 311. That's when you pull the trigger there.
Oil is still demonstrating a bullish trend above $90 a barrel. What's your current thoughts on oil?
Well, I didn't think oil was going to get much above 85, to be honest with you, and it went all the way up to 95. So I've been wrong on that, but I think it's overbought. I think it's very, very long in the tooth here. It's had an incredible run. But I think oil pulls back down to the low 80s. If it breaks that level, then you'll go down to the mid 70s again, back to that 75 level where it has found a lot of stability. You break 75, then that opens the door down to $50, believe it or not, or at least into the low 50s, which would be a lifetime buying opportunity. But right now, oil's held up very well. A lot of geopolitical events, as you know, surrounding it, whether it's OPEC and OPEC plus, production cuts from these guys, so it's very tough. But oil is held up much, much better than I thought. I told my members, if we got above 75, we'll go to 85. 85, I thought that would be about the extent of it. It's gone all the way to 95, now finally pulling back. And again, we'll see how it plays out when it pulls back to the low 80s. I think 81, 82 is the real test. If you break below there, then you go back to 75 again. So it's very tricky. These are tricky markets. And to crude oil's benefit there, or I should say, to give it some credit, the dollar has been very strong, and crude is held up despite a strong dollar. So, again, this is it's an ongoing story. I have to say, I was a little bit surprised to see crude go as high as it did, but it made a great move.
So you've given us your breakdown targets for oil. Do you have any melt up targets for oil if it goes the other way?
Oh, sure. Your old high was 130, so that would be the ultimate right now that I could see. But prior to that, you always have a psychological whole round number at 100. So you would have to watch the $100 level. Then you go pretty much every $5 from there. But 130 is the old high. And, the most recent high, I should say, that would probably be, a very, very big level to get through. So I don't actually see any of that happening. I think oil will retreat from here. But hey, this is a wild world and a crazy world we're living in. So I don't take anything for granted. Anything, all equities can go higher and lower than most people expect at any point in time.
Is it still a good entry point for nat gas?
Yeah, I think it is. I own nat gas right now. I've been in and out of it several times. So every time I hit target one, I move my stop to break even. Then when I get stopped out again on the second half at break even, I just get back in lower. But I love the base that nat gas is making. Nat gas got to close above 305. Once it does that, it's a squeeze trigger. And you'll get a possible squeeze up to $4 or $5 in nat gas pretty fast.
The dollar, you mentioned it's strong. You continue to see a strong dollar?
Well, the dollar here should start to putter out a little bit as we are into big resistance. This 106.75 area is what I had told my members the dollar will go up to. We are there now. We'll see if it can start to retreat. If the dollar does come down, that might be a positive for stocks because stocks have been pretty beaten up. And that might be a positive even for some precious metals, which are getting beaten up today as we speak. So I think the dollar has been on a tear since mid-July. It's had a tremendous move, but I've only calculated it going up to 106.75. Of course, that's not going to be, the level where it just stops. It'll trade around there, but we'll see if it can hold. If it can hold here in base, then it obviously could go higher. But this is all I'm expecting from the dollar right now up to this level.
What about silver and gold, your current targets?
Yeah, so I nibbled on some silver today. Personally, I bought some silver SLV today down here. But I'm aware that silver might have one more leg down as well as gold. And I think that I'm not sure of the second target yet, but I did nibble on some silver today. Gold, I'm not touching because, Bill, I'm looking for that to have one more deep retrenchment before getting heavily involved. And I still think that's alive and well. Gold does have some support in this general range, the low 1800s. But once it cracks this, it opens the door for that 1600 level. And then we'll get it in the low 1600s. I know my original forecast was for it to go down to around 1450 to 1500. I'm gonna cross that out now. It's been too long. Now we'll go down to probably the low 1600s, 1625, 1630. That's where you scoop it all up. But even here is not a terrible level. If the dollar will pull back, maybe gold will stabilize now. So it's wait and see. Let the patterns play out. Let them tell you a little bit more, and then you take it from there. It's just not so easy sometimes. This is a tough tape. So it's not that easy right now.
And Nick, I'll say this again. I always defend you in this regard because of the comments that come in, but you are a gold bull in terms of how you view it as real money in financial insurance. You have physical gold, so you're talking as a trader when you're laying out these points, these price points.
Oh yes, if you want to just own gold now and hold on, you're going to be fine. You're going to be grand. I'm just talking as a trader because a lot of people will say, oh, he's a gold bug or whatever. I don't really appreciate that term, because I trade these vehicles. I get in and out of GLD or IAU or whatever it is that, I might be trading miners. 2 weeks ago, I was in gold miners. I had Barrick Gold and Newmont. I'm out of both of them with options and had some nice gains there. So I'm a trader first and foremost, but longer term, every single ounce of bullion I've ever purchased from 2003, I've never sold a single ounce. And I still have every single coin, every single bar, and I will never get rid of it, honestly.
What about the volatility trade? Still avoiding that?
Yeah, volatility is too tough. I mean, we should be at such a higher level on the VIX right now, and it's, it gets to 17 and then 18, and then it comes right back down. We've been as low as 13 or even the 12 handle at one point. It's skewed. I don't know really the right terminology to put on it or to say what's wrong with it. I just don't know. But I just know that it's not acting the way it did in years past. And, if I don't have an advantage in something, I just try to stay away from it.
Congress keeps approving more money towards Ukraine. You still bullish the war stocks?
Well, not so much. Right now, it's always about pattern. They've come down a bit. At some point, I will be. If you're talking about defense contractors like Lockheed and Raytheon, I don't love those charts right now. Those charts have been damaged a little bit recently over the last couple of months, but lower, I would like them at a lower level. But right now, I'm not so keen on those charts. I don't think they're really giving us the setups for big advances at the moment for whatever reason. But I'm a chartist first and foremost. I'm not a fan of war, as you know, but we trade what's in front of us, and that's what we have to do as traders.
Last 2.5 years, the renewable energy ETFs have been trending down about 50%. Do you see a near-term bottom for those?
They're going to come up to a bottom soon, but they're not there yet. So I still think there's lower to go. If you're looking at something like LIT, which is, I believe, the lithium ETF, and these all have lower to go. So I would be careful with those alternate energy plays right now. I don't really see a true bottom in them. I'll use one of those stocks like Enphase. That's got to go down to like 105 before that puts in a real bottom. Right now, it's sitting at around 120. So I track them, and I just would wait on them. I would not be jumping on board here.
What's your best options trade the last 30 days?
Well, I just had 2 good trades, actually 3 good trades. One was Raytheon. I think we did close to 30% in a day. The other one was Barrick Gold and Newmont Gold. We did those kind of, a couple weeks apart from each other. So those have been the latest 3 winners in the books. But, it's been a very tough market out here. It hasn't been, you're not getting a lot of opportunities right now like we've seen in the past. Right now, the market it's in a very tough trend because there is no trend on the daily chart. Daily chart can go up a little bit and then we can go right back down. So the sell side action has been a little bit more prevalent than the buy side action. But it's still very, very tough because you could sit down at your computer 1 minute and you could have a Fed person come on television and just say, hey, I think we're at a good level here. And next thing you know, the market can get a big, big bid and a squeeze. So these are very tough markets right now, at least for me. And I've been doing this a long time. So I'm going to say it's probably tough for most people.
What about long-term call options, Nick? Do you have any of those in your portfolio right now?
I don't right now, but I'm not opposed to that. I probably would do something along those lines in the precious metal space, the copper space. When you get to those big commodity runs that are on the cusp of taking place, those would be some, you'd buy some call leaps, some leap options out long duration, and those will pay you handsomely. So I'm not opposed to it, just not, the timing isn't right for it just yet.
What about your best and worst trades of the last 30 days?
Oh, I got in Conagra Foods around $30. That stock's now at 27. That's a horrible trade. I really thought I had a great level for it, and it's just completely just gone lower. So sometimes that happens. Obviously, they have earnings coming up later this week, so maybe that'll turn things around. But I won't be in it for the earnings. I'll be out of it. So again, that's going to be a loser. I have an option that I just took 100% loss on, premium expired, worthless. So that's going to happen. Those are kind of the worst of the year so far. The best, I would say, I don't know. I had a nat gas play this year where we made 30% in, less than 2 weeks. That's by far, the best swing. Options wise, I've had, many good ones. So I'm not sure which one was the best there, but there's been a lot of good winners.
And biggest risk for Q4 that you can share with investors, financial?
Biggest risk for Q4 would be getting too heavily short this market right now and a central bank turnaround occurring. You got to be aware of that. It's just, the playbook since 2009 has been the same. Every big rally that we've had has been on the short squeeze. So if you go back to like March of this year, 2022, the bank stocks were falling apart. We had 4 bank failures, 3 in the U.S., and you could say Credit Suisse failed before it was overtaken by UBS. So we've had 4 bank failures there, and the central banks came in with a ton of money. They flooded the banks through the discount window, even though it's not called quantitative easing. It is a quantitative easing in a sense, even though they're doing a quantitative tightening, right? So it gets very confusing. But the bottom line is, they're pulling a Goodfellas. They're putting the liquor in the front door and moving it out the back door. So there's still liquidity in the system. So that has been, that's tough, and they could still do that. So, I would tell traders, just tread very carefully here. Don't overdo it one way or the other. Don't overexpose yourself. Let the charts give you more clarity. You always want to trade best when the trend is in a direction, whether it's a true uptrend or a true downtrend. In this case, we got a lot of weaving. Even though the markets are trending down since late July, the bigger time frame trends are still holding up. So you have to be careful here because central banks can really, really change things in a heartbeat. And I've learned to respect that over the years. So, I'm aware that I would not rule that out again.
If you like what you've heard today from Nick, go check out his website, InTheMoneyStocks.com. Nick, really appreciate you coming on for the monthly check-in. Thank you for your insights today.
Oh, always great to be back, Bill. Thank you.